computer. All right, perfect. So as of right now, we should be live recording. I'm gonna go IG live as well. I forgot I was gonna do that real quick. And get started with that. What questions do some of you guys have? If y'all want to verbally speak it out, if anybody wants to do that. Let's see. Turn that off. And I should got enough juice. Hopefully this will last for us here. All right, perfect. Where am I gonna put this at? We'll just put it right here. No, let me scoot back. All right, so we get started in just a second. One second. Delete. Okay, let me set it up. I'm gonna do it. I'm gonna turn it sideways. Okay, we're good. All right, so and then I'm gonna scoot this back. All right, perfect. That's the work out. If it don't, it don't. Okay. And we're live. Perfect. All right, so guys, let's go ahead and get started. So, all right, let me see what some of the questions are here. And so you guys, let's see what we got in the chat box here. Okay. All right. All right, so everybody's on right now. If you guys want to unmute your mics, I know I got a couple questions as far as like what how to look for certain pairs for the upcoming week and what to look for when it comes to them. Anybody else have any other questions you want to address? Okay, you can unmute your mics if you want. This is gonna be a participation type thing, guys. And I know Pastor Ron, I think you may be at work as far as what I see here. So if you can't speak, I understand that as well. Anybody else? Okay. So what we're gonna do is talk about how to choose the best pairs. I'm gonna kind of hide the screen a little bit from here. I'm gonna hide you guys a little bit and put you maybe at the bottom down here. All right, so what we're gonna do, so one way that I look for good pairs, just as far as like looking for what to trade during the week, I actually have set my pairs up over here on the right hand side. Can you guys see my screen? Give me a thumbs up, yes, or something in the chat. You can speak, just
yeah, you did.
Perfect. Okay. All right, good deal. So yeah, what I do is I basically I've set all my pairs up over here on the right hand side, and I've actually color coordinated them to be red and then just whatever other color I want to use. But I put them all in order, and I have dirty charts and clean charts. But basically, I want to just basically flip through them. So when it comes to me looking for certain pairs, I want to just start at the very top, whatever. It doesn't matter. There's no order of these, but I'll just kind of flip through them and just look at what structure looks the best. And if I see a potential setup on something, then I'll look to trade it. If I don't, then I'll leave it alone. So so for example, if I'm looking at UJ right here, just to start off at UJ, I'm looking at structure right here, and if I want to go to a higher time frame or whatever time frame I feel like that I trade, just looking at a higher time frame pattern, UJ right now is at a level of resistance. Like this is it came back, it peaked a little bit below it, came all the way back to the resistance level, and now we could be looking at a potential short when market opens. So if I had to predict obviously what's going to happen for UJ, and telling myself, is this pair ready for me to trade or not? It's at resistance. If you're ever going to sell, selling at resistance is probably going to be one of the best risk to reward ratios, because it's at a high level of liquidity, or exhaustion. So looking at how the market, moved from, this point up here, and it went down at this resistance, and went up here, went down at the resistance. Well, what do you think probably is going to happen at this particular point? So if it's at this particular point of resistance right now, most likely it's probably going to sell off at this point as well. So looking at, as soon as the market opens for UJ, I'm probably going to be thinking for sell. And we just have if you look at market mechanics as far as what just happened. We have a huge, bearish push right now, bearish engulfing on the 4-hour time frame. Let's go to the 1, and you start to see the 1 hour is made essentially this is a new lower high point as well. So we could be looking at selling, as soon as you get into, as soon as the market opens. So, I wouldn't be surprised if this goes from here all the way down to the bottom. Let me see how many pips this may be here. So you're looking at a good 80 something pips, probably potentially 100 plus if it continues to do what it did the last time, which is make, see below it a little bit. If we're looking just at support, where obviously we have area liquidity right here, but as far as what the support is way down there, you have 100 plus pips if the market breaks. So that's that. And so, if I had to say, hey, is this pair ready for me to trade? I would say yes. So this would be a pair that I want to look at coming to the new. Let me go to USD Chef. So I'm looking at USD Chef. Let me go to the daily time frame for that, and just kind of looking at. Okay, so right now, if I were to draw a zone, exhaustion zone down here, I would say that, well, we're coming out of the zone here. If it rejected, if I wanted to be even a little bit more technical, maybe let me do this. Actually, let me see. If I start the zone over here and just extend it out, now we have potentially support there, support here, and it looks as if this thing may be support as well. But we want to definitely respect the actual trend that we're on. So we're definitely a downtrend, but this is, if you look at the nature of the pair from this area, we seem to be going up. So it wouldn't be surprised if we go up from this point, but I would need to see, more information as I go down. So if I did that, let me go down to the 4-hour time frame. Looking at the 4-hour time frame, we're already making 4-hour higher lows. If you're looking at structure points, keeping it simple, low to the high, higher low. If you tune out all the noise, higher there, higher low, higher high, and then potentially right here at a higher low point. So now, if we did go up, oh, sorry, go ahead. If y'all have questions, y'all can stop me in any way too as well. Okay, let's see. Okay, Christy. Okay, good deal. You guys can talk. Feel free to, if you guys want to just talk and stop, you definitely cut me off. So at the very top, so right here on USD Chef, if I had to say, okay, what is the market probably going to do when the market opens? Looking at where we are, looking at this is a support zone down here, we're probably going to go up. And if we did go up, I would expect for us to probably start right around this area, and that'll be like a take profit point for me. Just being that the market essentially making a lower high point here or a repeat high, and then going to sell off at that point. So I would be looking for a buy for USD Chef. But again, searching to see if what pairs look the best and what opportunities look the best. You still want to see bullish momentum. If I'm going to take this particular trade, I'm going to need to see some bullish momentum. So when the market opens, I'm going to be looking to see, okay, am I getting some lower time frame, higher highs, higher lows? So for me, if I were to take this trade for a buy, it's going to have to pass this level of resistance right here. Like, it's going to have to pass this. And if it doesn't, I'm not going to be able to take that, because right now we have bearish, it's just in a bearish swing right now. So I wouldn't be, for me, just me personally, I wouldn't be looking to take any sells right now, because we're right here by the area in which it's rejecting. So could you sell and still be safe? You could. And I don't want you guys to not think you can't sell, but just knowing that this is a level of support right here, area of liquidity, and we're probably going to get a major rejection from this part. Just being honest. So out of the two pairs, USD JPY, USD Chef, I would be more so apt to trading UJ because it just looks better. So this is what you typically do when it comes to searching for pairs and looking if, hey, or just kind of looking through the pairs and see what you want to trade for the week. Looking at this pair, USD CAD, obviously on somewhat of a pullback here on the daily time frame. I would say that this actually may be ready as well when it comes to break and retest mechanics. The market has already retested this level of support that we made right here, and if you look right here where this arrow is, we've retested it already. Now we have a lot of bullish exhaustion that most likely as you bring the time frames down, end up being somewhat of a bearish variation. So here, for me, if you were to take this trade, let's say the market came up just a little bit more to maybe right around that area. If you took that trade, let's say you did a 55 pip stop. Let's just say you did that, right? It's kind of large, but let's just say you did it. It's USD CAD. Sometimes got to be a little bit more lenient on it. If we did take that trade, where could UCAD go? Well, if anything, just keeping time frame small. Let's just take it back to this low, right? Just simple basics, right? You're looking at 100 pips, so a 55 to 60 pip stop if you were to take that, and 100 pip TP, right? Obviously, you want to get that stop as tight as possible. You want to bring that time frame as low as possible. And as of right now, if we go to the 30-minute time frame, now your stop can be a little bit more, closer. So now we may be looking at from, if we were to take it, just let's just say we take it this potentially bearish move right here. Let's just say we did that. So we would be potentially having around a 35 to 40 pip stop, and then still a 100 pip potential take profit. Right. So, keeping these things in mind, this right here, in my opinion, looks like it may be ready to go. You can also trap the price with somewhat of a trend line, if you're looking at it that way as well. So you can kind of have something else to kind of save you or protect you. If you look at, for some of you guys who like to draw counter trend lines, you essentially just broke the counter trend line as well, like right here. So these are two reasons at this point. You have 1, 2, 3, a third touch of the trend line. Because if you had this point A, this point B is just extended it out, this will be your third touch. This will be your break of your counter trend line. This looks like a very strong bearish candle. Market opens. This may be a good sell, right? This may be a good short. So again, this is essentially, what I do. So I don't have to go too much. I'm not gonna go through every single pair to just break them down, but because essentially you guys are getting like a chart breakdown at this point. But just flipping through the pairs and seeing how they look, seeing are they ready to go, and if they are ready to go, just put them on your watch list. Color coordinate the flags or something like that if you want to, and yeah. So, but yeah. Anybody have any other questions? What other questions you guys have? Anybody else? Unmute your mics. Unmute your mics. Man, what you got for me? What you guys got for me?
I'm sorry, I'm over here trying to, transition to the laptop. But I was going to ask, can you show some examples of a transition from bearish to bullish, or vice versa?
Okay. Good deal. All right. So we actually have a great example of that right here. For some of you guys who need the question, some of you guys on IG, the question is, can you show a transition from a bullish market to a bearish market? So how does that look is basically going to look like this. So let me get my pen. So basically you're going to have a bullish market, which creates higher highs and higher lows, right? For some of you guys who don't know what this is, keeping things super simple, you have higher highs and higher lows being made, which is essentially called an uptrend. Okay, so that's making just uptrend momentum. You have, if we start at the bottom, we got a low here, we have a high, higher low, higher high, higher low, higher high, higher low, and essentially a higher high right there, right? So if that is the uptrend, how do you transition from an uptrend to a downtrend? Just keeping things super simple. In order for you to go, or in order for you to maintain an uptrend structure, you have to make a new higher low and then essentially a new higher high, right? That's how it's supposed to happen. But let's just say we went from this particular area right here, and we went down here, okay? And we started to now pull back and do this. Well, since the market failed to make a new higher high, but instead made a lower low, that's now what we call a transition, or a break of structure. So you go from this high to this low, now you have a break of structure. This was that most recent point of structure that needed to be broken in order for the uptrend to now cease, to now becoming a downtrend. Now you start making downtrend transition, or downtrend structure points, which is lower highs and lower lows. All right. So you have your lower low, your lower high, your lower low, your lower high, your lower low, and then what comes after lower low, you have your lower high, right? Just keeping things super simple. So in order to give that, some to come to the charts and show you that, you know, just plain and simple, if I stayed only on this time frame right here, and we looked at this particular area being a low, let's just, you know, keep it simple. Let's say we have the low, we have the high, higher low there, higher high, higher low. And yes, we have kind of like a triple top, but we're just gonna call this one area higher high, right? We can also call this area, this low, a higher low. So let me just get the arrows real quick. And we have a low to a high to, we can do, let me see, low to a high to a higher low, higher high, higher low, higher high, and then higher low, right? Then we go to transition to make somewhat of a lower high, but we're gonna call this all the same low, but we just have a repeat high all these different times, right? And then if this right here, this area right here was our most recent higher low in the uptrend that we have, then as soon as we start to break this last level of structure, this higher low, once we break it, now we have the transition from this higher lower high point to then make a lower low. Then obviously see after you see that it goes down, makes a lower high, then we make essentially a lower low, but this is really in the same area, so we just call it a repeat low. All right, and then we have a repeat high, and then again another repeat low. So when you have that, this area essentially here is your consolidation, right? And you know, and once you consolidate, you know, just to give some more examples of what that looks like here, when you consolidate, which means the market is essentially moving sideways. You just go sideways for a while. You have a main level of support that's there and a main level of resistance that's there. And you're either going to break up above and retest, or you're going to break below and retest. And those retest areas are your entry. So just keeping it super simple. It is very, very simple. You know, that's how you kind of look for those transitions in the market. So I mean, as simple as you can do it on the whiteboard, really as simple as it can be on the market. You just have to be able to figure out how to tune out some of the noise the market makes. So you know, looking at things from this perspective, you know, just keeping structure points simple. You know, let me get the boxes here. So let me see. So you have the low here, high, higher low, higher high, higher low, and then your higher high, which is remaining constant here, and your higher low, which is remaining constant there. Once you start to print some more candles, and then you make this structure point, that's essentially again your high, but it's lower. If we look at this high based off of this high, it's lower, right? And so then you break this particular structure point right there. And obviously you'll find a level of support, which looking left, structurally is clues, it's probably gonna stop somewhere around here or somewhere around there, right? And then you see the exhaustion coming right there. So we're probably gonna stop here. If you look directly left, exhaustion is here. It's probably why it's gonna stop. And then you go down here again a little bit further. You have your lower low point, and you see that the market actually creates the real support right there. Looking left, structurally is clues. You could have said that this high would be the area. Really, I think that's it. Let me get everything off the charts here. Looking at keeping things simple, I would say that this high here, if I extended that zone out, what used to be resistance here turned into support there and remained support there as well. And but again, structure broke way up here. Okay, so you're just setting those parameters of where the structure point needs to be broken. Once you have that level kind of identified, you break it. You want to come back and at least retest it to some extent. And you know, based off of this low rejecting here, and then now it having some type of uptrend momentum, you know, again, looking left, structure leaves clues. There's exhaustion there. You would say that any one of these areas here is where it's going to come back and then eventually sell off, right? And that's just playing it out. And that's kind of what happens there. So yeah, any other questions? Anybody else? Or did that answer your questions, May? Did that answer your question?
Yes, sir. That was a great example.
Appreciate it. Any other questions anybody else have? Anybody on IG? Anybody on IG have questions y'all want? You guys can talk as well. Put questions in this chat on IG if you want to. Can't give the champ strategy out at all. But anybody wants some goodies? Anybody have questions, comments you guys want to take advantage of? Okay. Appreciate you guys getting on. A lot of you guys popped on, popped off. Okay. Yeah. Anybody else? Man, what was you saying something? Look, if you want to be the guy asking the questions, that's fine. But if anybody else ain't giving questions, you got
Uh, hmm.
it.
So can you show like the importance of exhaustion?
Okay. Absolutely. Great question. Great question. Okay. So importance of exhaustion. Let's go to a different pair here. Let's do, let me go Cash Chef, see what that looks like. Okay. Give a good time frame. What was I doing on that pair? Go Cash JPY. Ooh, excuse me. All right. So I want to go with this example here. So we're on the 4-hour time frame, and keeping things simple, you're making, higher lows. The floors are getting essentially higher. So yes, you have, higher highs, but then you have some lower points that you can deem as highs, but keeping things simple, you have the floors, the bottom parts are getting higher, right? So you're making higher lows, right? So with that being said, looking at the question, and, again, for you guys, I got a question here. So once you break structure, once it breaks structure, you get in once we see the next candle. Kim, great question. I'll get to your question next. Okay. As soon as I'll get to that question next, just stay tight for me. Stay tight. So the question he just asked was, what's the importance of exhaustion? So for me, I'm doing a 5-day course for some of you ladies next week, so you guys will get this more in depth. But I'm just keep it at very simple for this. But looking at the support areas, what you guys will see is that there are levels in the market that create what we call wicks. There's little sticks coming from the tops of these candles. All of these sticks coming from the top of these candles are called wicks. Keeping it very simple. I'm trying to keep it as basic as possible for some of you guys who may not know what this is. And these can be also areas of, some people call them areas of liquidity. Some traders call them supply and demand zone. There's many different things that you can call these things. So with that being said, I call them exhaustion zones. So what you want to do is, obviously for some of you guys who are in my course, you'll know exactly how to draw them, but just so I can keep things simple, what you'll do is basically when you see these little areas that you have these sticks from, let's just say, let me delete the market, like right about there. So let's just say this was real price action right here. This is where the market was. Current candle was right here. And you started to see these sticks just start to print from them. Okay. So you start to see the exhaustion, right? The exhaustion that starts to come. What you'll notice is that the purple candle, let me move this a little bit closer for some of you guys so you can see a little bit better. Okay. So this purple candle here is the first candle that printed. And if we're looking at like price action, it went all the way down here to the 82927 area. And then you look at the next candle and it actually created price action a little bit higher as far as the wick is concerned. Both candles closed like around this area. Like if you look at just the bottom of the candles, the actual like volume is here, but it left something behind, so that's what we will call that exhaustion. Okay. So if I look at that, and let's just say I'm planning for the future, right? So I'm going to start to draw. I'm going to get my rectangle tool on the TradingView app or the TradingView website for some of you guys who use this tool. I'm going to use that and just kind of extend it out into the future. And what I'm going to do is just basically prepare myself that if the market goes up, if the market just so happened to go up and come back down, if I know that the market rejected, once right here, based off how exhaustion works and the importance thereof, if it rejected this time, I'm probably going to get some type of rejection here as well. And we're on a 4-hour time frame, so you could be looking at anytime you see a bearish candle come into a zone and then a bullish candle come out of it, that means that you had a break of structure somewhere. Okay, it had to have a break of structure somewhere. So inside of this area, when you see some of you guys have a lot of different like colors as far as what you use in your charts. I'm not sure. Some of you guys who are beginners may have green and red, which is like the basic ones. My bearish candle is purple. Okay, so this is the sellers in the market, right? So if you see a bearish candle followed by a bullish candle coming out of some type of exhaustion area, there had to have been a breaker structure again. So that means that you had a downtrend essentially happen, and then you had a breaker structure. Now the uptrend came. That's the only way you can have a bullish candle come after a bearish candle, is you had to have some type of breaker structure from a downtrend to uptrend. Otherwise, you just continue to have purple candles. Hopefully you guys get that and understand that. Now, so looking at the, building for the future, obviously, like I said, if the market goes up, obviously if it's probably going to stop here because structure leaves clues. This created wicks up here, right? What I could have done is do this. I could have drawn an exhaustion zone from this area, just kind of planning for the future, right? If the market created wicks over here, could have just used my rectangle tool, drew it out into the future, and basically said that if the market comes back again, if it rejected here and gave all these different wicks, and I start to see, let's just say one candle came up here, but I start to see like a whole bunch of wicks right there, I can then start to look and prepare for potential trades to come out of there, because now if it's starting to look like what this looks like, I know that this thing's probably going to reject. Same thing if it came back down here. The market came back down here and gave me some wicks, like kind of like this right here, at least one candle. If I have one candle with a lot of wick, a lot of exhaustion, I'm going to automatically be on lower time frames, waiting for structure to go from this downtrend structure to then start to make those uptrend structures. And there's going to be a breaker structure somewhere. So, and that's, trading is really all about anticipation. If you can anticipate what the market is going to do. So like, for example, let's look at this thing live. So if I see this candle right here, I'm just going to kind of give it to you live. All right. So let's see. Now we have two touches right here. I still have this exhaustion zone up here, kind of up there. Let me kind of extend it out a little bit more, because you just draw it out to the future. You don't know what's going to happen, so you just have to keep extending it sometimes. So we got pretty much a double bottom right here. If I see that price, for one, created this level of exhaustion, went up for a little bit, came back again, exhausted again, this level of support is now solidified. It's solidified for me. That means that this level is so important as of now that I can start to look at this as, okay, you know what, the market's probably not going to go down anymore. All right. So if that is the case, I'm going to see the rejection. Okay, we coming back again. Try to see what these candles do. Okay, so we're in the zone. We keep kind of bouncing off the zone, but if you look at it very closely, there's wicks. There's going to be essentially some breaker structure somewhere. So for me, I'm probably going to give myself some parameters or some rules. I'm saying I'm not going to get into a buy unless we break above this line here, because this happened to be right here, happened to be the most recent, lower high point, if you want to call it, that that structure is made. And again, I'm on a 4-hour time frame. If I were to break this all the way down, there's earlier breaks of structures. Matter of fact, let's do it. Right. So we're on a 30-minute time frame, right? So if you look at this red line is my 4-hour breaker structure point, right? Like I said, basically I wasn't going to buy until it broke that point. Well, once you go down to smaller time frames, you see more data. So I can now kind of get rid of this red line because it's the 4-hour time frame. I'm essentially a little bit late if I wait for that line to break. Now I have newer levels that I can go, or closer levels that I can kind of deem as a lower high point, right? And if it breaks this line now, gives me some type of retest and my entry signals as far as bullish engulfing, bearish engulfing, whatever the case may be. Once I see what I need to see, I'm not going to be able to take the trade. Okay. We have another bearish candle right back into the zone. I'm expecting some type of rejection because it's rejected every single time. Boom. There's your break, right? Huge candle. I probably would not have been able to get in on this unless I was on probably a smaller time frame, like the 15 or the 5, whatever the case may be. Now, granted, I could have already just because the market is here in this zone, regardless of the fact, let's just say I could have already taken a trade right here because we were already at the support level. If I seen this rejection and it went up and the market came down, made like a double bottom and went up, and the market came down again and gave me some type of engulfing like right there, I could have already just taken the trade just based off of confidence and say, and then, you know, obviously using good risk management, I could have said that, okay, you know, if I take that trade, my stop loss is going to be below the zone. 25 pips. I think that's a decent trade. Decent trade. Like as far as like your risk is decent right here. Now, my take profit, if I did take that trade, would be obviously the top zone, 45 pips. I have a 25 pip stop, 45, or essentially a 50 pip TP. That's a good risk to reward. So 1 to 2. But I'm gonna just leave that there. But let's just kind of look at. Well, let me get it out because I want you guys to be able to see the candles. But all right. So if this candle shot out and I didn't, and I missed my opportunity, I would wait for some type of pullback, obviously, in the market. Let's see what it does. Things to go up. So that first trade, let me see if I can pull that thing back up. So if you look at this, based off the trade we would have taken or could have taken over on this side, like right around this area, we would have went into a little drawdown. Let me see how much drawdown we would have went in. Like 10 pips drawdown. And then we would have hit our TP for 45 pips in about 2 days and 2 days, 3 hours, 30 minutes for some of you guys who are numbers guy like myself. But see, that would have worked out just off confidence, right? But if you were waiting for some type of break of structure and pullback, your only opportunity that I see right here that you could have taken would have only had been right here based off of the engulfing right there, which is still would have been all right. Your stop loss would have been a little bit larger if we took that. Let me see. It would have had to been, I mean, honestly, just candles like extremely large, but you would have had to been like right around there or even below the zone. So you're looking at like a 30 pip stop or 45 maybe in a short TP area because of like where we, I mean, it's a 25 pip TP versus a 40 pip or a 35 pip stop. It's okay. I mean, it's profit's profit, but you're risking a lot. So if you did take that trade, you probably would have go a lower lot size just to kind of take the trade because you know that it had broke structure. So, but anyways, that's that. But the importance of the exhaustion zones is basically this: if you see the exhaustion, if you see that there's an area created and it's exhausting a lot, and the market comes up and comes right back to it, and it comes right back out, comes back again, comes right back out, that means that this level here is very, very important. And any types of trades that again come back to this zone should be treated as the same as this until the market proves you otherwise. Like until the market just decides to finally break below, which it has to prove it to us that it's going to do that. We're going to still think the same thing every single time, that this market is going to, that the support is going to hold up. So hopefully I answered those questions for that. To get, let's see, Kim, if you're still on, I'm going to answer your question here. So once it breaks structure, you get in once we see the next candle. To answer that question, anytime structure breaks, let me go back to the drawing board here. Anytime you have a break of structure, Kim, make sure here. Anytime you have a break of structure, you always want to wait for some type of confirmation. So let's just say we had a downtrend, right? We had lower highs, lower lows being made. All right, Kim, let me know if you're still on. If you're not, I'm gonna definitely let you know to watch the replay. But let's just say we had a downtrend, lower highs and lower lows being created, right? Lower high, so lower high right here, lower low, lower high, lower low, lower high, right? And we made a lower low. Once the lower low is made, obviously if the market is going to break structure, it's going to have to break the most recent lower high point right here if the structure is going to change. Okay, so if the market is going to go here and now break the structure, okay, so now we have a break of structure, we have a higher high, we have to wait for some level of some pullback, right? You have to wait for some pullback of some sort. And if you look just from this particular area, there are at least 2 areas that the market at bare minimum, there's 2 areas that the market can retrace to. If you look left from this area, we have this high that if we extend the line out, the market can come here and still go up. Or we could do this high right here, which is where the market structure broke. It could come down here and still go up. And just these 2 areas right here are bare minimums as far as what the structure is telling us. Now at max, the market could come all the way down here and still go up as long as it doesn't break structure. Does that make sense, Kim? Let me know. I see you're still on. Type yes if you understand that. Okay. So again, I'll say it again here, just so everybody else can get it. Okay. So if you're gonna break structure, okay, okay, I appreciate it, Kim. I appreciate it. So if you're gonna break structure from this downtrend, you have to pass this most recent lower high point right here. Like it just has to break that. Once you break it, you make a higher high. You have to ask yourself, okay, from this point, what areas can the market come back to retrace? Okay, so it's going to be either this area or this area at bare minimum. Okay, and max, it could come all the way here. Okay, so that means that based off of this high here, the market from this point can come there and still go up. Based off of this high, the market can come down here and still go up. And then based off structure still staying in now an uptrend movement, if it comes down here but does not break the low, we still have an uptrend move. Okay. So glad you understand that, Kim. Anybody else have any questions before we hop off here? Any other questions you guys want to get done? Well, Kim, let me actually go to the market real quick, show you that real quick. Just so you'll get it from the candlestick perspective. I can go down to, let me see. Let me go down to a 15-minute time frame. Let me go to, I mean, there's a lot of different examples I can use. I actually like this one here. So if you keep thinking, this is a 15-minute time frame, so it's a little bit noisy, but let's just keep things simple. Okay. So if we started at, if we use this particular point right here as the starting point, we have a low to a high to a higher low to a higher high, higher low, higher high, higher low, higher high, higher low. And then right here, we essentially, let's just call it a higher high, right? And then we have a repeat low, a lower high, repeat low, same high, repeat low. Then now we start to have the lower lows here, but the lows on the bottom side remain the same. If you look at it, there's actually a very, very, very consistent level of support right here. Hope you guys can see that, right? You guys can see that. So it's a consistent level of support right there. So basically, if the market, again, if we're looking at it from an exhaustion zone perspective, I can draw an exhaustion zone like that and just kind of extend it out based off of the wicks that the market gave me right here. Okay, so I'll zoom in so you guys can see that. So based off the wicks the market gave right here, I can draw the exhaustion zone and now extend it out into the future. And what you'll see is every single time the market came down to give, different, to try to break through, it never broke through until, boom, few candles right here started to do it. Okay, so once we started to see some candles print below this level support, if the market just consolidated all this time and never broke through, once we finally break through, rest assured you're good to take sales at this point, right? You want to see a pullback, a retest, like you want to see a retest of this level support of some sort, but for the most part, just keeping things simple as far as like you taking, let's say short-term trades, intraday type trades, rest assured, right? Getting some sniper entries, you're able to take sales off of the bearish engulfing patterns that you see here. All right. So, and that's just, just keeping things just simple. Okay. Again, trade with money that you are willing to lose. For some of you guys who are looking at this as this is your first time hearing this stuff, I'm not telling you to buy or sell any currencies, CFDs, whatever the case may be. This is just strictly for educational purposes only. Okay. For some of you guys, I'll put this on my YouTube. For some of you guys who are watching this on YouTube, this right here is just, again, it's for educational purposes only. Okay. So now that I had that said, disclaimer, obviously. Again, so Kim, if you're still on this right here, again, hopefully that example made sense, and kind of, because I know you kind of asked, do you buy as soon as you break the structure? You want to have some confirmation. So let's say we broke. I mean, essentially, some of these candles right here broke the structure. Okay. Now it made a level of support right here, and then it gave us some type of pullback. And the pullback, when I say some type, it gave us more than just these little small candles. Like you see a couple blue candles there. Let me zoom in all the way so we can really see it. You see a couple blue candles here. You see a couple there. If you look at these versus these, I would say that this is now, just for this time frame, so it's the 15-minute time frame, right? For the 15-minute time frame, this looks like a better pullback than some of these. Though these are cool, they're valid, that just may be a little bit more risky because you never know what the market's going to do, right? But when you get a decent pullback right here, and then you get your bearish engulfing pattern, let's just say you took that trade there, structure broke, not sure what this looks like. Okay, let me just see if this real quick. If we put it above the high that is right here, we're looking at 20 pips, 20 to 25. 25 will put us right here at the very tops of these wicks. And then if I'm, if you're looking at just support, like let's just say let's say we just we chose this level of support right here based off of the floor that's right here, right? Let's say we did that as a TP, right? Looking at about 28, 29 pips. And obviously you see that it hits, right? So this is just on one entry, okay? Just one entry. You could have gotten on other engulfings, right? You could have gotten in, so this would have been that one entry. When the market gave us 2 candle pullback right there, and then another bearish engulfing pattern, that could have been another entry. The market gave us a full pullback here, followed by a bearish engulfing pattern. That could have been another entry as well. And I'm gonna stop there because I don't want you guys getting trigger happy when it comes to these entries. But 3 different entries that go for about 28 pips. 20, 40, 60. Let's just say, or 369. We'll round it to 30. So about 90 pips, anywhere between 70 and 90 pips is your TP for 3 different entries, right? But just keeping it simple, one entry, 28, 30 pips, whatever the case may be. Look, guys, if you're using, a 0.5, $5 a pip, that's $150. If you're using a standard lot, it's $300, right? So again, this is just for educational purposes only. But hopefully that makes sense for you, Kim, and whoever else is still watching. And anybody else before we hop off, any other questions? Maine, got any other questions? Anybody on IG that may be watching that join, have any other questions? Anybody else before we hop off? Okay, you're definitely welcome. Definitely welcome. I see you guys commenting on IG live here.
Thank you, sir.
Pastor Ron, you still on?
Yes, sir.
You have any questions, sir?
No, I don't. You covered pretty much everything.
Okay. Appreciate you for hopping on, sir. And tell your wife I said hey, okay?
I most certainly will.
Anybody else on IG live here wants to take any questions before we go? I'll give you guys 30 seconds. 30 seconds, okay? 30 seconds. Maine, you good? Hopefully Leon is good as well. Hope you guys are good.
Oh yeah, you explained everything, at least for now. I always have questions, but we at least got half the points that I was trying to get understanding on.
Okay. Well, good deal. Hopefully you guys enjoyed the webinar again. Well, this will be loaded to YouTube probably in the next 48 hours. Appreciate you guys hopping on. You guys take care.
Oh, definitely. Great.
All right. Meeting here.